Senate Committee on Transportation and Housing. I'm the Chair of Energy, and we're here with our Chair of Transportations, our very dear Senator Jim Bell. This hearing today is to discuss an issue that has begun to receive lots of attention here in the state capitol in Sacramento. Concerns the rapid growth and the popularity of technology-enabled ride-hailing services. Several companies have begun to operate in this arena and created somewhat of a disruption to the conventional model of ride-hailing transportation services in California. So these have affected the taxi, the limousine, the airport shuttle industries, and it's created a change in the way people are beginning to perceive these industries. So I thought it would be very important to have a committee to address some of the bills that we've been seeing here. The disruption of this has created economic conflicts among all those services that I mentioned, and it has resulted in concerns about fairness, that the policies that are being pursued versus the ones that are currently in place do not give a level playing field to all the people within these industries. The ability to pay somebody for a ride to get from one location to another is a centuries-old industry, and one that has been governed in California and state laws for over 100 years, albeit mostly at the local level. And recent changes to that has exacerbated that relationship among all the different transportation providers. As many of you know, the recent technological advancements that have been introduced that allow customers to arrange a ride from a phone app or a phone application or a computer software or through some technological communications device are argued to be different from just the traditional model, just the communication method, the method by which the customer and the company communicate is said to be a reason why different rules need to apply to the actual ride that's being provided. In response to the view that this is a new and distinct service, the legislature has been making various piecemeal changes to the rules governing transportation for hire in order to accommodate this new app-based business. We've seen various legislative proposals, including providing unique and differing insurance requirements, proposing exemptions from commercial license plates, allowing for individual fares or other similarly licensed services, allowing one service to almost act as a bus and do serial rides along a route. All those things have created an enormous disruption. I thought it would be important to have this hearing to provide a good overview to the legislators to understand this industry. This is in my experience, being somebody that is a former employee, former businessman in transportation, and a former board member on a transportation board in San Diego County, I thought I had a good understanding of this industry enough to understand that when we make decisions in a vacuum here that are not related to other decisions as regards to a new upcoming industry, that it provides some concerns that the legislature is not providing a comprehensive reform to a new regulatory package that hasn't even been introduced. So before there's a regulatory package, legislators are already proposing bills to provide that regulatory oversight. I think there's a conflict with the job that the PUC has been given to do by the legislature. We have asked the PUC to come back with a comprehensive regulatory framework, and before they've even done that, we've already seen bills. It is my hope that today's hearing between my committee and Senator Bell's committee will help the legislature and the public. This is also for the benefit of the public in all of California to understand. It'll provide an opportunity for everyone to understand the consequences and the implications to Californians and Californians, which are the consumers and the employees and the business owners, of the changes in the rules governing transportation for hire. So specific concerns are issues related to public safety, providing adequate consumer protections, establishing expectations regarding accessibility and equity, and ensuring fairness in the marketplace. Before I lay out the agenda, I would like to extend an opportunity for members of the committee to make some opening remarks, or especially our chairman of transportation, our great Senator Jim Bell.
Thank you, Ms. Senator Wesso, and it's really nice to have the joint hearing today. The transportation network companies started in California have really grown quickly. It's been really good product for customers and has created opportunities for drivers. Of course, we have, fair competition issues with taxis, limousines, shuttles. These things naturally arise. We had and will continue to have healthy debates as we try to sort these competition issues out. Today, we'd like to take a step back, however, and consider transportation for hire, the business more broadly as a transportation benefit for the general public. And we now have some benefit of some studies and analysis, as we're going to see today, by experts that we will hear shortly, and we should learn from these experts. This will provide us, I think, with some important background as we've considered some of these competitive issues later this year as we receive bills. Now, I'm looking forward to hearing from our Public Utilities Commissioner, Randolph, and thank you so much for being here and hearing what the CPUC is doing in terms of the recent regulatory developments. Now, on a broad level, the transportation for hire industry sits side by side with our public transit agencies. While not the focus of this hearing, I look at it from the standpoint of providing broad transportation services to the general public. I'm also interested in learning how the industry can help us meet some of these broader mobility goals for our public. And some of these goals are provided by our public transit agencies. Now, as many people know, traditionally, myself, and I know all my Senate colleagues know this, that I always look specifically in transportation of how to provide transportation ensuring seniors and individuals with disabilities have equal access to transportation services. So my feeling is we should address this issue today and discuss it on how our senior and disabled are benefited by this new industry trend. We should address that particular issue. I'd like to have the speakers address that. I'm very interested in how this industry can help and help us have implementation of equal access for all in accordance with our laws, such as the American Disabilities Act. And we should have that in mind when we considered the fact that, as many of us know, the federal and state funds for healthcare, transit, all kinds of other federal funds are used in the public domain to subsidize right for hire services in our communities, federal funds, state funds, Medi-Cal funds, transit funds, other kinds of social service funds are used for transportation. So it is very important that we look at that particular issue because right now, the system we have now is the underpinning of equal access for all. And a lot of people are worried that the new, whatever happens in the new transportation model will have a negative, possibly a negative effect on equal access for all. So we have to look at that very closely. I think it's our obligation as public officials. Thank you, Senator Wessel, and I look forward to hearing from all our speakers and listening to colleagues' comments and areas of interest. Thank you.
Thank you. We have our calendar arranged in the following manner. The first panel will be three of the authors of the recently released study by the Transportation Research Board of the National Academies, who will discuss their research findings and recommendations related to addressing the disparate regulations. We have, as mentioned by Senator Jim Bell, Commissioner Leanne Randolph here of the California Public Utilities Commission, who will share the actions of the CPUC in regulating ride-hailing services, including the recently proposed regulations for those services. Then we'll have representatives from local agencies, including cities and airports, who have been on the front lines addressing these issues for the existing transportation services of their regions and the new app-based services. And of course, and finally, the representatives of the industry, including all the different ride-hailing companies, all the transportation providers in question. They will provide their perspectives about what is working and not working under the current rules and regulations. And last and not least, for all of you out there that came to participate in this session, we will take public comment. It's very important to us to hear from you. So if you have something to say, we would love to hear from you. So I will call up the first panel, led by Brian D. Taylor. He is the professor of urban planning, the director from the Institute of Transportation Studies. He's the director of the Lewis Center for Regional Policy Studies and the UCLA Luskin School of Public Affairs. Of course, UCLA, probably one of the best schools in the world. We had to have you here. He'll be followed by Susan Shaheen, Dr. Shaheen, the co-director for the Transportation Sustainability Research Center and the adjunct professor for the Civil and Environmental Engineering University of California, Berkeley, another fine institution. And followed by Bruce Schaller from Schaller Consultant in Brooklyn, New York, but with quite a track record and history in California as well. Welcome, and Mr. Taylor, if you'd like.
Thank you, Mr. Chairman, and it's an honor to be before you and the members of the committee. We're going to provide some information on the report that has just come out that we were all involved in, as you mentioned. I want to begin by saying that we're part of a group of the Transportation Research Board of the National Academies of Science, Engineering, and Medicine. One of the roles of the National Academies is to provide consultation on the information of science, technology, and policy issues to Congress and the federal government. We convened a committee of experts to examine the rise of smartphone-based mobility services. Now, the report actually covers a broader range of issues than were discussed at this hearing today, and it included things like car sharing, ride sharing, bike sharing, other things. We'll focus our remarks today on things focused on the meeting. The committee was formed, vetted, and began work in June 2014. Things were moving very quickly during that time and since then, so it was certainly a moving target as we were putting things together. This is a list of the committee members, and you're going to be hearing from these three today, so it was a larger committee. The purpose of the committee, when it's put together and publicly vetted, is to provide a broad range of expertise. So we had people with backgrounds in urban planning and transportation policy, public transit and shared use services, regulatory and economic analysis, transit operations and technologies, and taxi operations and regulations. So we tried to have a broad-based set of expertise. We held 4 two-day meetings in 2014 and 15, and we gathered information and took testimony, and we drafted the report. Part of that was to review both journalistic and scholarly inquiries. Because this is a relatively new topic, there wasn't a large body of research on which to draw. It actually grew as we went along. We were very focused on things that would be carefully and rigorously done as opposed to, say, advocacy pieces, and we tried to sort through that. The committee heard from representatives of the taxi industry, and that would be both firms themselves and regulators. We heard from representatives of Uber and Lyft, of car-sharing operators, of insurance providers and regulators, city council members who were typically involved in taxi regulation, developers of other innovative services that weren't just around transportation network companies, and from public transit representatives as well. We also heard from members of the federal government, the various modal administrations. So let me just give you a quick overview. I'm going to talk a little bit about the taxi and TNC economics. I'm going to draw on work by one of our committee members, Michael Manville, in doing that. I'm going to offer some brief comments on some of the public policy issues raised in the report. And at the end, I'm going to come back and give you sort of a flyover of the main recommendations of our committee. Dr. Shaheen is going to talk to you about new mobility services and their implications for travel behavior. And Mr. Schaller is going to talk about kind of the future of the taxi industry in the post-TNC world. So first, where this is headed, I think there are two views on this. One is that the things that we're confronting right now are the tip of the iceberg. That real-time decision-making about trips, about the various travel options, about the time it takes to get to locations, providing quick, reliable, and convenient ride service is only going to grow and expand. There'll be more kinds of firms, more market niches absorbed, that there will be a significant expansion of these systems in the years ahead. That fare reductions and shared rides will accelerate with current growth. If some of these services evolve to be able to take multiple riders across locations, and there's a dense network of service coverage, there could be tremendous economic benefits and environmental benefits that could occur. And really the sky is the limit, in that we could conceivably be moving from a mobility society where we focus a lot on vehicle ownership to one where we purchase our vehicle trips one at a time. Now, there's a second view, which is contrasting that, and says, well, we see big changes here, but this is really for a niche market. This is about a long-established for-hire industry. We've had some disruptions in it. We need to say that the changes are significant for a few people, but are not going to have widespread changes in urban travel, the way that people move around regions. And we haven't sorted out, we discussed sort of the arguments for both of these, but these are two plausible things, that we'll sort of reach a steady state with some of these new services. Another is that this is only the beginning and that this is going to change a lot more. So if you think about a range of services from ride sharing to for-hire transport, information is the big challenge. And a lot of this is about information. So getting a ride from someone else, whether they're a commercial operator or a neighbor who gives you a ride, it requires lots of information. There's coordination that's required. When and will the driver and rider meet up? Where will they go? When will they go? How will it be organized? Will other people be involved? There's also negotiations involved. Can the rider and driver agree on terms? How much is it going to cost? Who's going to pay for what? Am I going to give you a little money for gas? Is there a fare meter in the vehicle? And then there's an issue of trust. So when a stranger gets in a vehicle, will they be safe? Is the vehicle safe? Is the driver someone who's safe? And a lot of this is about that information. So if we think about the emergence of the taxi industry over the years, regulation has evolved and emerged to address each of these information problems. And when we trace back many of the taxi regulations we have, they're about addressing these problems of information. So then there's this question is like, where did this private business come from? Why do TNCs seem to be thriving? What's happened? And so there's a lot of things that have addressed that information problem that TNCs have addressed. So the peer-to-peer app reduces information costs. It also reduces entry costs. So entry, we mean entry into the business. It's much easier for someone to get into the business than it was before. They can use their personal vehicle, they get the app, they're up and running. And because there's information cost reduction about where you get picked up, where you go, how long the trip will be, who will pay, all of those things are dealt with as well. The driver provides a vehicle in response to market demand. The app removes the need for dispatch service. The real-time information for both the driver and the passenger change the dynamics. There's driver and vehicle picture and ratings. There's a cashless transaction, which addresses all sorts of things related to the transfer and the risk of charging and paying money. And there are digital footprints for the trip, so that a problematic rider can be known and a problematic driver can be known in a way that wasn't possible before. And information gleaned from all of these app users can go into setting real-time prices. It can minimize shortages, a variety of other things to respond to market demand. So then there's this question about the way that pricing works. So historically, there was that negotiation issue about how much to charge, what should the fare be, what's an extra rider, that much of regulation has evolved. Surge pricing in this way is an idea that the price and supply vary with demand. So one of the things that happens is that when the price surges, there's an incentive to draw more vehicles into the market. So there are no price controls, and it operates like many other things in the private sector. And there are no quantity or location controls. And those are completely at odds with the historical evolution of what we might call sort of the street hail cab system. Flexible employment means that there's a large pool of potential drivers on reserve. This is part and parcel of the sharing economy, where the line between commercial and private is blurred. So the vehicles that are used move in and out of private service, and they move in and out in base part on demand. And rising prices can have two effects. One is it can increase supply by drawing more vehicles in, and the other is it may moderate demand by saying this is a time of high demand and we can't afford that. So in the existing system, we can have times where prices are set in a fixed way. There might be times where there isn't sufficient demand to satisfy the supply of drivers. At other times, when demand is very high, the price is fixed. So what usually happens is that it becomes very hard to get a cab. So instead, by floating this up and down, you're moving supply and demand in and out. It's much more of a private market response to the problem of providing the service. So there are a few issues that we try to discuss in here. And some of them are, the cab industry is very atomized. That is that from city to city, you have a lot of variation in the firms and their size. Here you have very significant sized firms, very large, and they have significant market power. Now, this could be an issue for public regulation, but it may depend on how they're able to restrain competition. There are right now what we describe as low barriers to entry. That is that other people can get in the market if monopolistic pricing and practices emerge, and that people now have the right to drive for multiple firms. So it is possible that competition will continue, but something that hasn't come up much is if there starts to be monopoly exercises of market power, there could be other kinds of regulatory issues that could arise. But right now, that ability of competitors to come into the market is something that can have a disciplining process. And in general, when you have markets anywhere in the economy where you have low barriers to entry, you tend to have lots of competition. With respect to security and public safety, the new services provide more information about drivers and passengers, okay? So this information is closer to the outcomes than our vetting. And you can think about that. We want to know, is a driver likely to be a good driver? Or do we expect to have any problems? We can do background checks and try and predict that. And that's an important part of the process. But we also have much more direct information on how they're doing right now. And it's possible through regulation that you can get even more information on that. You know, how aggressively is the vehicle being driven? A variety of things that are possible so that you can get ongoing information that may be important with safety. And this can increase safety for both drivers and passengers. I mean, an issue is also the safety for drivers. And with information now about the passenger, which you typically don't have in, say, for example, street hail services, you have a disciplining process on safety with that regard. Now, the effectiveness of various approaches to driver vetting, and we did kind of a careful review of this, what kind of research had been done to really examine the various ways that we vet drivers, and there's been very little rigorous analysis of this. There are many plausible policies that people did reasonable things. We'll do this as a background check, we'll do these various things, but really evaluating whether that's a cost-effective way of predicting outcomes. As a researcher, I would say that we have very little information on the quality and the cost effectiveness of those kinds of approaches. We have sort of practice and what people have done for a long time. And determining the most cost-effective approaches, because we want to protect the public interest, really requires some more study of these various ways that they're done, how big of a problem is driver safety, is passenger safety, and what are the best ways that we can get at that. This is a field that I would say we have very little work on. We also conclude that consistency across services is desirable. So there is a benefit to having consistent safety and security and public safety requirements across these various providers. What that ought to be, I think, is not so well studied, but whether consistency is beneficial is something I think we support. With respect to labor issues, the number of drivers is growing extremely rapidly, and especially in the part-time drivers. And this has sort of changed the nature of this industry. We found in the research that we looked at, where we've had some reliable information, that limited employment and security benefits is common across the industry. So both within TNCs and the traditional taxi and livery industries, there isn't a lot of security of employment, and these issues are somewhat significant. We also point out that this question of independent contractors and employees is a stark line that doesn't reflect sort of the evolution of the economy and labor and work, that in general, it's not confined at all to this industry, and at a public policy level, at the federal level, there's a lot of work going on now at trying to understand more of a continuum between the classic employee and the contract employee, and how that's changing over time. We see this as sort of part and parcel of those larger issues and not specific to this industry. So with respect to insurance, taxis typically have full-time commercial coverage because the vehicles are used full-time for commercial purposes. I would say when we started our work, there was an enormous uncertainty about the nature of insurance within the industry. Over time, we've seen an evolution toward insurance coverage that varies by the stage of the ride. You have vehicles that are operating in complete private service and doing commercial service and moving back and forth between the two. And over time, we've seen that insurance products were evolving somewhat slowly, but they've started to reflect that fluid movement between public and private. And we're seeing sort of a catch-up in that you now have vehicles that are not just 100% private or 100% commercial, but they're some of both. Finally, with respect to equity and access, we see this as being a somewhat complicated terrain, and we try to go through in our report and lay some of these out. As I mentioned, there are issues about market dominance that are important to consider, about questions about competition, whether people are competing on an apples-to-apples basis, but also one of regulatory capture, which is a term where regulators start to take on protecting the interests of the industries they're designed to regulate, and what is in the public interest versus the industry interest is something that is sort of cast into sharp relief now that these new services are in place. With respect to regulations and subsidies and social services, the question of regulatory consistency is an important one. The taxi industry has not, as we'll hear later, has not been regulated in a consistent fashion from place to place at all. But we also have differences between livery services, between these new TNCs, and so there's a lot of uneven regulatory terrain. There's also a question of where the responsibility, for example, of providing various equity requirements should come from. So one thing says is that industry and its riders should be responsible for providing those kinds of services. So we put an extra fee on the taxi fare or the TNC fare to help pay for specialized transportation services. Another view is, in some places, taxis include fees that help support public transit. So the idea is that taxi riders should be responsible to helping to subsidize public transit. Another view is that these are society-wide obligations, and it's not necessarily obvious why someone paying a taxi fare, a TNC fare, is required for providing social service transportation. These are important things to kind of clearly sort out in going through this. And then there's the question of social service transportation obligations. Again, that blurred line complicates things a lot. When you have 100% commercial providers and you have people driving their own vehicles and perhaps giving a ride to a hitchhiker, the line is very sharp. But when you have vehicles moving between public and sort of private service, it becomes more blurred where the obligations should come on. If we have a ride-sharing matching service, is there an obligation to provide, say, accessible services? And as we know from a lot of social service transportation, it's not just a wheelchair lift, but the training of the driver and the ability to deal with the social service aspects of the service that are extremely important. Again, this is, how far on that continuum toward public and private service do we make those requirements? And then finally, there are a variety of stakeholder groups that may not be in similar territory. People without smartphones is a very big issue because all of this depends on smartphone access. The issue of unbanked populations and who they are, the workers involved in these industries, these are all important stakeholders to keep in mind. So there are many dimensions of equity that we try to go through in the report. So I'm going to stop here, and I'm going to turn things over first to Dr. Shaheen. She's going to talk through, I'm going to just pull it up right there. And then I'm going to come back to recommendations at the end.
Thank you, Brian. And I'd like to thank the chair and the committee for the invitation to present. I will be covering implications for travel behavior from this study. A few of the things I'm going to touch upon are some of the key study observations, which Brian has also covered, so I'll touch on those lightly. We'll also talk a bit about equity and access again. Opportunities for the future is, I think, a big focus of this presentation. So these are some of the key observations from this study as it relates to travel behavior impacts. And one of the things that the committee noted at the very beginning is that sharing is not a new phenomenon for us at all. Carpooling has been with us since the World War II era. And so this isn't new, but the disruption that we're seeing is. Information technology, I think, as we've acknowledged, is playing a tremendous role here in terms of facilitating a customer experience with respect to a match, with respect to a payment exchange, and also enabling people to know who the driver is, who the rider is, and opportunities for rating on both the passenger and driver side. The ecosystem has been evolving tremendously in just the last 3 years. The lines have blurred between what we would define as traditional ride sharing, which really is truly carpooling and vanpooling, into services that cross into both categories. And this is happening not just in the T&C industry, but also in the taxi industry itself. So it's difficult to even know what these services are in their traditional sense. There's lots of new entrants. This was happening throughout the entire course of the study, and we were also acknowledging notable investment in this space, which was also causing dramatic changes. The committee concluded after extensive work in the literature review component of the study that these services are still uncertain and that they have definitely transformative potential. Car sharing and bike sharing are two of the areas in shared mobility where we do have more documentation, more understanding. And in these cases, there has been evidence to suggest that these types of forms of shared mobility can reduce auto ownership, travel, and emission impacts in the net effect. However, more research is definitely needed on all of these types of services. So, as these services continue to emerge, evolve, blur, there's a lot of implications for travel and a lot of implications for what those impacts are going to be on the household level and also on our overall public transportation system. And so this was an area that we spent a fair amount of time on as a committee. You know, as we look to the future of services evolving, we had a lot of debate and discussion about will these increase, decrease vehicle travel? And the implications are unclear because the data have not yet been collected or analyzed with respect to this. You know, there's a potential that travel could increase, and the increasing, effects could be shifts towards more walking and shifts towards more public transit use. Could lead to people filling up empty seats in cars, so higher vehicle occupancies. It could also increase our overall energy efficiency. But then the counter effect is it could lead to more traffic. It could lead to more sprawling land uses. It could lead to induced demand, so trips that wouldn't have happened otherwise, and consequently, more greenhouse gas emissions. So overall, it was unclear to us, what the ultimate effects are of these types of services on our transportation system. I think one of the really key behavioral questions that the committee wrestled with was, as people turn to mobility services, we see this in services like car sharing, in which people depend upon a fixed asset. If people shift away from a fixed asset more towards variable costs and marginal costs, do they think differently about how they travel? And if that is the case, does that lend itself to different forms of travel, so perhaps more public transit use and less driving overall, or could it actually lead to more travel and to more sprawl? And then this leads me to, I think, another key area for travel implications, which Brian also discussed at length, is equity and access. And a few points that I want to make to complement Brian's is that, the committee notes in the report that about 8% of the U.S. households do lack bank accounts, so they're unbanked. So will they be able to access app-based services overall, and how will that affect their ability to travel? Furthermore, 36% of Americans currently do not own smartphones. So if we rely on these app-based services to access these types of modes of travel, are we leaving some people behind? And that was a concern of the committee overall. We also noticed that there was, diverging views on accessibility in terms of taxis and TNCs. There was not a clear view on, which service may provide superior accessibility. And in fact, the committee spent a lot of time examining the role of taxis and the role they play in terms of providing paratransit services, and that they do maintain fleets that have vehicles that are equipped for wheelchairs that are not collapsible. And they also provide opportunities for cash payment. So we thought that these were very important implications for the future as we look to the policy realm overall. I'm going to conclude my remarks with opportunities, looking forward to the future. So with information technology and with the ability to do a lot of things that we couldn't do before from a logistical standpoint, what opportunities do we have for new services and new players and existing players?